Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. What is today? I think today is Tuesday. Yeah, it's Tuesday. It's the 12th of July. July is almost halfway behind us. And as you can see here, the market's going to open up in about an hour and 24 minutes to be exact with you. Now, we've got a lot of things to deal with this week. We've got COVID. Is COVID going to increase? Is this strain going to become dominant? Are there going to be lockdowns, especially in China? We've got financial stocks reporting later this week, and we're starting to segment into a new earnings season. We've got CPI tomorrow, and investors are very, very curious whether this decline in commodity prices means the peak of inflation. Let's get into the market, and I'll answer all of your questions to the best of my abilities. Now, the Dow's down about 200 points. The blue chips are down. NASDAQ is pretty flat, and the S&P, as usual, is meeting us halfway in between. Now, we may see some gyrations in the Dow because there's a lot of earnings coming out. So be surprised, because summer, a little less liquidity, a lot of fear in the market. That equals heightened moves, or moves that are above the typical volatility level. So be careful. Big report tomorrow, as I mentioned, CPI. Let's get into global economy, and I'll kind of put everything together for you. Investors are on the lookout this week for updates on inflation and corporate profits, while renewed coronavirus outbreaks are adding jitters, especially in Europe and China. Adding to the pessimism, get this is crazy. Hong Kong authorities announced they're considering implementing an electronic health code system to restrict movement of people infected with COVID. Yeah, that'll work really great here in the States, right? As well as overseas arrivals, a similar system to what's already placed in mainland China. Yeah, U.S. people will really love that. The highest inflation in 4 decades is pushing the Federal Reserve and other central banks to hike interest rates, which puts the clamp on the economy and hurts various investments. Companies this week are set to report earnings, how profits are facing during these tough times. Big banks always start out. We've got JP Morgan, Morgan Stanley on Thursday, BlackRock, Citigroup, Wells Fargo on Friday. It'll be very, very interesting. Now, here's what you need to pay attention to. Expectations for second quarter results seem to be low. That could be beneficial because if the numbers are low, and if we come out slightly above that, that means we can get a rally. Also, the fact that we're low is baked into the market right now. So expectations are not that high. Analysts are forecasting 4.3% growth for companies across the S&P. Keep that number in mind, write it down, because I'll be giving you an update as we go, which will be the weakest since 2020. Beyond earnings updates, report this week on inflation will likely dominate trading. That's what I was talking about. Wednesday, we've got the CPI report, which will show if inflation accelerated to 8.8 or stayed at 8.6. That's going to be very, 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 very instrumental. And energy prices are declining, and investors want to know if this is a peak to the inflationary pressure, which according to the bond market may be likely, because the bond market is not moving down anymore, which is telling us that the long bond thinks it's too much too fast, that this is just too much too fast. It doesn't want to react. And if the long bond is not reacting and is moving sideways, look at how techs are reacting to it. See that? There's a huge correlation between the long bond and tech. Look at Amazon, for example. Let me show you what I'm talking about. They all look exactly the same. Look at that. See that? Look at that. Look at that. How about Crocs? I was showing somebody Crocs the other day. Look at that. See that? Very, very similar. Very, very similar. So if the long bond starts coming up because inflation has peaked, that's going to be very, very beneficial for these stocks that I'm talking about right now. Now, again, as I mentioned, we've got CPI tomorrow. That's really going to be the big report of the week. That's going to shape everybody. And we're looking at 2 numbers, as I mentioned yesterday. We're looking at the big number, the annual number, and then we're looking at the ex-food and energy. I'm more concerned with core CPI, because if it's at 5.8 or 5.7, that means there's a good chance that inflation ex-food and energy has been causing most of the inflation, has in fact peaked out. And if that's the case, then the supply chain bottlenecks and the war will cool off energy and food. But year over year, I'd love to see the number at 8.6 versus 8.8. If we can get 8.6 or 8.5, we can get a rally out of this market. But if it's an 8.8, that means inflation is actually getting worse. Keep your eye on that number. Very important. Now, here's the squirrely thing in all of this. And I want to spend a little time on this. And by the way, I want to talk about stocks. We're going to talk about the strongest sector, weakest sector. And that has to do with the strongest stock, weakest stock. Now, you guys may know that Jeff Zananeri has a program called Money Links. So this is right on par with what he's talking about. And I'll talk about what Jeff's got coming up a little bit later in this video, but you don't want to miss this out because this is really relevant and this is worth its weight in gold, what I'm about to talk about right now. So if you look at the sectors on a cumulative basis, which we usually do, you'll see that energy is leading and consumer discretionary is lagging. And you can go with that, and we can find the strongest energy stock and the weakest consumer discretionary stock. But I'll be honest with you. I mean, if you look at a monthly basis, energy took a big fall. And right now, healthcare and consumer staples are leading. And I would rather go with the two sectors that are behind energy on a cumulative basis and are leading ahead of energy, a lot energy on a monthly basis for the strongest sector. And for the weakest sector, I'm still with the consumer discretionary and communication services, but mostly now I'm starting to focus on basic materials and industrial. Because if the market picks up, then these stocks will start coming back down. Because if speculative stocks start moving, non-speculative stocks start dropping. So it's tricky right now. But if you want to play it safe, I would go with the speculative play to the downside. But instead of energy to the upside, I would go with either healthcare or consumer staples. Now, if you look at the S&P 500, if you look at the major stocks, you'll see you still have Occidental Petroleum leading, but look at Vertex Pharmaceutical, Lamb West Holdings. These are consumer staples and healthcare stocks. So my suggestion right now is go into one of these three. LW, CI, VRTX, there's going to be less speculatory pressure on it. Because, if we do get a sign tomorrow that inflation is in fact peaking, it's not going to be good for energy companies, but it'll be pretty good for these companies because these companies will do good regardless. We're still going to be, even if inflation peaked, we're still in an inflationary period. We're not all of a sudden going to, do this and the world's going to become normal again. It's going to take time. So these consumer staples and boring healthcare, which doesn't have a lot of impact from consumers, is going to hold up. So you got Merck, you got Lilly, you got Cigna, Lamp Western, Vertex. All these are play right now. You got Dollar General. Again, Valerio Energy, Occidental, I would just hold off right now till we find out if inflation is peaking out or not. Now, on the downside, so healthcare, consumer staples. On the downside, I'm going to tell you folks, COVID is starting up again. Yes, COVID is starting up again. Do you really think we're going to be traveling on these cruise ships? I don't think so. I mean, Royal Caribbean, Norwegian Airlines, I don't know. I don't know about them. I'm still bearish on them. As a matter of fact, I'm really, really bearish on them. Now, if you want to go outside of this, you can go to here's a stock, PVH, Freeport. But honestly, I still hate these stocks, and I think COVID is not going anywhere. And these stocks are getting these cruise ships are just not going to be rocking and rolling. We may have some closures this summer. I don't think the worst is behind us for these cruise lines, especially with this news from China. People with infected implementing electra health code system to restrict movement. I mean, just think about that for a minute, right? That doesn't sound that great. That doesn't sound like COVID is over. So I would stick with the speculative stock like Royal Caribbean, Norwegian. I would stick with those. And for the strongest stock, I'm telling you right now, you could do energies, but I would be careful. I would stick with pharmaceuticals, consumer staples, pharmaceuticals, healthcare, or consumer staples. Consumer staples, you got Dollar General, you got Molson, Coors, you got Kellogg's, Campbell Soup, Dollar Tree. They're all coming up just like I told you they would. So that's where I would go. And remember something, folks. Remember, this is important. This money links thing I just gave you, buying the strongest stock, fading the weakest stock. Jeff Zananeri, who most of you know, he's been on fire this year. Now, he's predicted 3 of the major market pullbacks, and he's been spot on with his macroeconomic analysis. Well, he expects the next 45 days or so to be critical for this market, and I couldn't agree with him more. We've got so many things going on. The next 45 days will determine, are we peaking out? Is inflation peaking out? That means energy prices will start going down. That means spec stocks will start going up. That means there's going to be a lot of changes if that's the fact. But Jeff knows what he's talking about. This guy is a macroeconomic genius. He expects the next 45 days to be critical. The reason why has to do with the Federal Reserve policy that he said could send shockwaves through the system. And this report that's coming out tomorrow is going to be very, very instrumental. You can get all the details directly from Jeff. He's going live Thursday at 1 p.m. Eastern. Yes, Jeff is going live Thursday, 1 p.m. Eastern. You can get all the details. And this guy is an expert in linked trades. That's what he does. That's his meat and potatoes service. So 1 p.m. Eastern time on Thursday, get all the details. You don't want to miss out. The next 45 days is literally going to be crucial. Because if COVID ends and if inflation peaked, that's a different kind of market. If COVID's going to come back and inflation peak, that's a different kind of market. If COVID's going to have another bite at the apple and inflation didn't peak, that's another market. And we're going to find all this out within the next 45 days. So it really is very crucial. And on top of that, you've got earnings. So I couldn't agree with him more. It's happening at 1 p.m. Eastern time on Thursday. You don't want to miss out. All you've got to do is reserve your spot to get an update on his outlook and how he's playing the market. You don't want to miss out. Follow the link below. And if you're watching on YouTube, you can go to the Wealth Press YouTube channel, follow the link in this video, and I will talk to you guys tomorrow. Have a great day. Stay out of trouble. Send me love letters. I haven't heard from you in a while. Post some comments in this video. Bye, guys. Take care. Have a great day.